Hey guys, Steve here from theturtlefollower.com with the strategy session for Thursday, October 16th. Essentially what happened today was more of a little indecision on the part of the Bulls and Bears. We basically closed pretty much unchanged. And you could see what happened this morning was we were down at one point this morning almost 27 points again, right down to this 18-14 level. The low today was 18-15-25. The low yesterday was 18-13. So within 2.5 points of yesterday's low, and we bounced off of it. At one point we were up, I think it was like 8 or 9 points, maybe even more. And then, of course, the end of the day came in, selling happened, and we closed pretty much unchanged, up 2.5 points. And again, similar to the other night, futures kind of sold off a little bit after the close of the market. Futures trade 24 hours, in case you weren't aware, basically from Sunday night to Friday's close. So they traded a little bit past 4:30. They kept selling off, and I think we ended up closing down, I think about maybe 4 or 5 more points from where the actual cash markets closed. For right now, though, what happened, the one takeaway from this is we finally got an inside day. Inside day meaning that this day, all of the action was inside the bar from yesterday. Not hard when the bar from yesterday really was almost an 70 point bar from high to low. But again, this was an inside day, another form of consolidation. So what may be happening here is the market may be trying to just go sideways to hit this trend line and go down. Again, we talked about this last night, and not that I'm predicting this, but it is interesting to note, if you look at the SPX on the 10-year weekly chart, you could see that we are pretty much in a channel since the crash back in 2007. If we draw that trend line and redraw it as a channel, okay, you can see we hit the top of that line 3 times. The first time we just basically came back and pushed up again, came back, and then finally touched the bottom of the trend line or of the channel. And now, again, we've come in, hit the top of the channel. So maybe, we're going to potentially pull back halfway, which would be right around here. You could see, if you look at the SPX, it looks like that we potentially are holding this double bottom back from the beginning of April. That's potentially the area that we're holding right now. But, let's see how it acts. Again, 18-15 on the cash market. But again, this one could just meander down and eventually test the bottom of this channel here, and there would be nothing wrong with the uptrend. So again, not a prediction, but just interesting to note, that as much as we've pulled back, it's not saying that we can't pull back any further. Okay, as far as the NQs go, get that back up. All right, NQs again. Today we actually penetrated a little bit below yesterday's low of 36.90. Today we came in a little bit lower than that, 36.82, and bounced off of that. So these tails from these candles at least tell me that there's one of two things happening. Either buyers are potentially stepping in, or sellers are selling, buying back their short positions. So maybe sellers aren't wanting to push it much lower. They feel like they've hit a profit target, or buyers are stepping in saying, hey, this is undervalued. We're stepping in here. Now, of course, we don't really look at that too much. We really just want to follow the trend as much as possible. But the fact that we have some substantial bottoming tails here, if we can finally get a move higher, say right now over 37.87, then we could potentially call this at least a temporary bottom, and then work our way back to this downtrend line, or at least to this breakdown of 38.50. and then see where we go from there. But at this point, we still have not reached the bottom. This is a potential bottom, but it needs to be confirmed with a move over, say, 37.90. And at least that would trigger some kind of a reversal. How much, that remains to be seen. And the last one, the Dow, again, another inside day similar to the S&P, came right in, back down to that level of 15,766 and bounced off of there. And you can see that if you go back a few months, back in the beginning of March and again in the beginning of April, the Dow bottomed out at 15,900. So you can see we have not yet had a close below 15,900, or for that matter, we have not closed below 16,000 yet. Actually, this would be going back to this bar, 15,965. So the fact that we haven't had that happen, again, maybe the sellers are kind of taking their foot off the pedal a little bit and allowing the buyers to come in. The last one I want to look at, especially because it's been outperforming the last few days, is the Russell. Now, we all know the Russell broke down from this symmetrical triangle. We really thought it was going to hold either 1,076 or 1,065. It did not hold that level, but look at how quickly it did regain those levels. All right, look at today's action. We are up 1.78% in the Russell compared to 0.14, 0.13, and 0.11 in the other three. All right, so to me, what's happened here in the Russell, it's broken that downtrend line, it appears. It's finally closed above it. So next area of resistance I would see on the Russell would be 1103, and then eventually the bottom side of this trend line here, which looks like it may potentially get across of the 50-day moving average at the same area. So the takeaway from here is that the Russell is the stronger of the three. It looks like it's gone through its pullback. You could see here on the, let's take all these drawings off. You could see here on the weekly chart, we came right in to the second standard deviation move on a linear regression channel and are now look like we're bouncing off of it. So now whether this is an actual bottom or not, that remains to be seen. The first thing I would need to see would be a weekly close higher than the week before. All right, that hasn't happened, and you could see what happens is it appears that the Russell moves in like a little bit of a streaky nature. So here, the weekly chart, you finally got the close higher, and then 1, 2, 3, 4 weeks up, then came down pretty steadily, then went up pretty steadily, down pretty steadily. All right, so then you see how right now we're in this process of red candles, 1, 2, 3, 4, 5, 6 red candles where the weekly high on each candle. So what we would need to see, first of all, if we get a green candle, that's a good start. Second of all, we would need to see a weekly close higher than this high here from whatever this candle finishes at tomorrow. That would be a good sign that this is potentially a short-term bottom, and maybe it wants to trade higher. And where that goes, again, it looks like right now the biggest area of resistance would be last support, which appears to be right around this 1100 level. Okay, we could draw that trend line in there, or that price level, so you guys can see that right about there. All right, so bottom, broke down. Now let's see what happens when we get back to it. All right, does it turn around, reverse higher? Does it push right through like it's not even there and regain the 1100 level, making this more of a false breakdown than anything else? But you could see how strong that support has been over the past year and a half. All right, so market-wise, we're getting some buying, not nearly as strong as I think it should be if we're going to really consider this to be a bottom. I could easily see us reversing down lower through those bottoming tails unless we get some kind of good news. And the other thing I want to show you is, yes, we were up at one point, I think. So now futures are kind of doing something now. You could see up 6 points. They're flashing around, so I don't know what's going on, but they are moving 6 o'clock, so that might have reopened. or the other markets may have opened in the other countries. But look up here by the cursor, 1.54 to 1, 1.51 to 1. Again, we talked about this the other night. This is the market breadth, meaning that since it's green, 1.54 stocks were up and positive for the day compared to every one negative stock, and very similar on the NASDAQ. Now, if we are considering a bottom where there's a strong market, a strong day, that number really should be 6, 7, 8 to 1. That's considered a trending day, a very strong day. The fact that we were just barely above 1 to 1, again, that'll show in our portfolio, and it also kind of indicates that there's some indecision, pretty much closing right around even between bulls and bears. So as far as our positions go, we are short Alcoa. We're going to take that short off. I feel like we probably should have taken that stop out here or that target here at 1380. We didn't. But for right now, I want to take the short off. It was really just meant to be a quick trade over 1457. We closed higher. And for right now, this is what looks to me to be a short-term bottom. You can see here, come down, lower high, lower high, lower high, lower high, and then higher high. All right, so now it looks like this potentially is reversing. Swing traders may want to take this to the long side, and I want to get out because, to be honest, I could see this going back up to 1536 fairly quickly. So I want to take this off tomorrow morning and book our small profit that we took. I think we may have gotten in here at 1489. So we'll take our 29 cents out of it. Again, I kind of wish we had taken half off here at 1380. Apple was down 1.31. Apple, we're going to let go. All right, we're going to exit Apple. It was up today. I was really expecting this to close back above 98. We have some earnings risk coming up. Right now, the fact that we were down 1.31 on a positive day, some good news out of the stock with their iPad event, some new products. For right now, this to me just looks like it's starting to come and unravel a little bit. And I wouldn't be surprised to see Apple somewhere down around the low 90s if this continues. But for right now, I think we're going to exit Apple, take our short or our long position out. And again, we've been looking at this as a rectangular consolidation. You can also look at it as a little bit of a symmetrical triangle. If we remove all these drawings real quick, I'll show you. Okay, so Apple is breaking down. Again, it was nice that it closed a little bit higher than it opened, but for right now, I think the best move is going to be to take this off. It should have held 97.80, did not. You could see where it came to today was pretty much right to that 97.80 level and then sold off. So I want to just take Apple off, and we'll wait for a breakout over, say, 103 to re-enter the trade. Okay, so Alcoa is coming off, Apple's coming off. Costco has been a disappointment really since we've entered, but you could see it's right above the longer term trend line. It's broken this trend line already, so let's remove that. And it's also broken this consolidation. So I really expected Costco to hold up much better than it has. But for right now, 120 is still our stop, and we sized our position to give ourselves a nice wide stop. And hopefully we can get Costco to turn around here. I really like the pattern on the weekly chart. We've talked about this being similar to a cup and handle pattern where you have this cup, you have this rounded bottom, sideways action. We had the breakout last week, looked good, looked like we were going to get some higher prices, and it failed, and now we're actually trading below that level. So Costco I want to keep an eye on. For right now, it's going to stay. 120 is the stop level, but I'm not happy with the way it's performed, especially again, we had somewhat of an up day, and the stock did not rally. Estee Lauder. All right, this is one that we're going to just stay short. Okay, we were talking about having a close above a certain level. It looks like right now this may be consolidating again in this lower range here. Okay, we took half of our position off yesterday. I gave you another opportunity this morning to take that position off if you hadn't yesterday at 70.43. We still have another trigger out here, another alert set for, I think it's 67. So let's see what happens with Estee Lauder. Again, up 0.25, which is fine, but it did not break above, let's actually move this. Let's put it right above that consolidation. So 72.51, a close above 72.51, and we will exit the trade. Assuming this is another consolidation, we would want to see another breakdown out of the bottom of this consolidation and then start to head to 67. Home Depot up 1.17. Okay, nice bounce. Pretty much right off of where I discussed yesterday. Okay, held this gap higher. That's where it's looking like it's finding some support, 86.58. And now it looks like we potentially may be able to get some movement higher. Came right into the bottom of that 50-day moving average. So what I do not want to see here is the longer it stays below the 50-day moving average, the more it sets up a short trade to the downside. I want to see this get back into the middle of the range, say right around 91, 92, and then consolidate in there for a breakout over 93.50. Kroger was down 2.14%. Again, you can see it's breaking down under 51.50. Our stop level, $50, is still holding, and the 50-day moving average and trend line has been broken slightly. But for right now, not the best looking position, but not nearly the worst either. Pepsi down 1.07. You could see it closed below or right at $90. During the day, it had moved below our stop level, but it was able to regain that. I'm sorry, our stop on this is, yes, our stop is $90 on Pepsi. Okay, we were using this low here, felt it shouldn't break below that. We were talking about you could potentially use 88 if you felt like you wanted to give it some more room. But for right now, 90.80 is our stop. And the last one, RSG. We're going to also let RSG go. Finally got a close below 37.86. You can see this looks like setting up another potential short. If you wanted to take that short, you could put your stop over 38.75. We're not going to be taking that short trade. For right now, I'm just really looking to be in cash and looking for some nice reversals. Stocks that are holding up well, that when the market looks like it may want to reverse a little bit and start heading higher, we can get on those. So I want to make sure our cash position is as large as possible. And the fact is, cash is safe. We've had today, we actually lost money on both of our short positions. They were both higher. So I want to just, we'll present the short trades. If they have a good risk reward, this one I don't feel does, because we could very easily come down to 36.84 and just consolidate within here. So for right now, RSG is just going to be an exit. So to recap, we are exiting Alcoa. We're exiting our short. Apple, we're exiting our long. And RSG, we're exiting our long. Now, as far as the watch list goes, UNH broke down. I don't think that anything triggered. SRE, that one looks good right off the 50-day. Sign. Okay. And the last one, Rost. Sorry, I just wanted to go through those real quick. All right, so as far as our watch list goes, nothing triggered. Everything's still holding up fairly well. Rost looks like a good one to potentially get in. It's holding up nicely. Looks like that 50-day moving average is kind of moving higher. So let's, for right now, again, let's just clean up the portfolio. Take that Alcoa short off. Take off the couple longs that aren't performing, and build up our cash position to get to the point where we're actually at a good area to take advantage of some nice trades to the upside and get back on track here. Sometimes I feel that if you try and do too much, you're going to just make yourselves nuts. and it's much better to have a nice simplified method. We did those couple of those shorts just as an example to show you how you can trade it to the short side. We did take a little bit of money out of both. So for right now, I want to kind of take it easy with the shorts. One reason being I feel like we've come down to maybe a potential reversal point. Not necessarily that it may be the bottom, but maybe it's a bottom. And I want to just kind of get back to the process at hand, taking some nice long trades and seeing where we end up. So for that right now, that's going to be the plan for tomorrow. Again, you could see those futures are starting to rally a little bit, but that could also be because they sold off right after the close. So, we have a lot of time from now until tomorrow's open, so anything can happen. But for right now, I think cleaning up those couple positions, it would be good to do. So that's it for tonight, guys. Have a great rest of the night. Thanks for watching, and we'll see you tomorrow.